Today we're going to go over 3 ways to make sure that your Medicare premiums are not doubled when you retire. So make sure and watch this video all the way through because you don't want to miss a single detail that we're going to go over. But before we do that, I want to tell you a quick story that's going to set the tone for this entire video. So back about 2 or 3 years ago, I had a client. For personal reasons, we're just going to call him Bob. So I met with Bob, like I said, 2 or 3 years ago. Bob was ready for retirement. He had worked and paid into Social Security and Medicare for his entire life, and he was ready to enjoy retirement. So what did Bob do? Bob went and took out a decent chunk out of his 401k money, and he took a decent chunk out of his mutual funds. And like I said, he was ready for retirement. He went and bought a boat and a brand new RV and planned on traveling the country. Well, unfortunately for Bob, nobody told him that if he took that money out into his possession, that Medicare was going to see that as income and they were going to more than triple his Medicare payments. So what happened to Bob? Bob went from paying what the standard premium for Medicare was back then at about $160 a month to paying almost $500 a month because he did that. That being said, we do not want you to be Bob. Nobody wants to be Bob in that situation, but you can easily be Bob if you are not careful. So let's talk about the 3 ways that your Medicare could double if you don't plan properly. The first one is pulling money out of a 401k or mutual funds or any tax-deferred account. Okay, here's the deal. So Medicare Basis, how much you pay for your Medicare off of your income. But they don't just look at your job or your work history or your Social Security income. They look at any money that you take into your possession from any tax-deferred accounts, like a 401k or a mutual fund. So they take all of those funds, including your income, including Social Security, they add all of that up, and that determines how much you pay for Medicare that year. So if you're getting onto Medicare, this chart right here is going to be super crucial to pay attention to. So if we're looking at this chart here, notice how it says your Part B premiums for 2025 are based off of your filing status in 2023. So important to note, Medicare will always look back 2 years when determining how much you pay for your Part B premium. So if we're looking at the first column here on the left, if you're an individual and you're not married and you make less than or equal to $106,000, you are going to pay the standard Part B premium in 2025. So that is $185 a month. But if your income from 2023 was greater than $106,000 but less than or equal to $133,000, you are now going to have to pay a $74 adjustment totaling to $259 a month. Now I'm not going to go through this whole chart here, but it works the same if you're filing jointly. So if you and your spouse make less than or equal to $212,000, you're just going to pay the standard $185 a month for your Part B. But if you're greater than $212,000 but less than or equal to $266,000, you are going to pay that $74 adjustment as well. And you can see, according to the chart, the more money that you make, the more that you're going to have to pay for your Part B. So as you're looking over your income, there is nothing that you can do to change your income from 2 years ago. Bob from the story earlier found that out the hard way. But what you can do is you can start planning now for the future. So if you're someone, either individual or you're filing jointly and you are right there at the cutoff, about to have to pay more, but you're still under, you know that, hey, I should probably not take anything out of my 401k or my mutual funds because it's gonna bump me up to the next level and I'm gonna have to pay that for the whole year. Okay, so now that we've talked about investment accounts, let's talk about the second way that you can double your Medicare premium if you're not careful, which is taking out Medicare before you retire. Now, I'm not telling you that you cannot take Medicare and still work. That is not what I'm trying to say at all. But this mistake catches a lot of people off guard, and I'll tell you why. If you're still working and you're making a decent income and you decide to take Medicare, refer back to that chart, because if you're a higher income earner and you're making, say, $250,000 a year, well, you're gonna have to pay that adjustment down the road, which is fine and dandy while you're working. You making $250,000 a year, you can afford to pay that adjustment. But what people don't consider is once they retire and they're now on a fixed income and they lose that higher income, they're still gonna have to pay that higher amount for 2 years. So just as a side note, if you're in that situation, I would highly consider stacking back some cash and knowing ahead of time that you're gonna pay that higher premium even though you're retiring. And the third way that you can double your Medicare premiums when you retire, and this is one of the most ugly ones, is allowing Medicare to penalize you. Now I wanna start off by saying that this mistake is 100% avoidable, but it's also the most common mistake that we see people make. So if you're working past 65, which is honestly a lot more common than it used to be, there are two things that you need to make sure are happening in order to not get penalized by Medicare. Number one, and it's very self-explanatory, you or your spouse have to be actively employed when you turn 65. And the second thing is you have to have coverage through that current employer in order to not get penalized for not taking out Medicare. But if both of those things are happening in your situation, you can actually bypass Medicare at 65 and take it once you retire or once you lose that group coverage down the road. But I do want to clarify, if one of those two things is not happening in your situation, you have to take Medicare. For example, say that you are currently still employed, but you have health insurance through a private company, you have to take Medicare at 65 or you're gonna get penalized. Now there are two types of penalties when it comes to enrolling into Medicare. The first one that you want to avoid is the Part B late enrollment penalty. And how they figure this is it's a 10% penalty for every 12-month period that you were eligible for Medicare but didn't take it. So this year, we saw on that chart, the standard Part B premium is $185 a month. So 10% penalty of that would be $18.50. So say that you were eligible for Medicare January 1st, 2025, and you didn't take it till January 1st of 2026, you're gonna be penalized 10%. So $18.50 per month for the rest of your life. So it's super crucial that you make sure that you're still working, you or your spouse, and you have that group coverage through that current employer, or you're gonna get hit with this penalty. The second penalty that you need to avoid is the Part D late enrollment penalty. And you get this penalty by not enrolling into drug coverage when you're first eligible. And how they calculate this penalty is they take 1% of the national base average for every single month that you didn't take it when you were eligible. So the national base average this year in 2025 is $36.78. So you would be charged 1% for each month that you didn't take Part D. And again, just to stress the importance of it, this penalty is forever and it's every single month for the rest of your life. Now I know we went over a lot of information and retiring can be stressful and overwhelming, but I wanted to let you know we left two links down below in the comment section. The first one is where you can apply to get our 2025 Medicare Planning Guide for no cost. We're giving it away for completely free, so utilize that link down below. And the second link in the comment section below is where you can book a free one-on-one call where I will personally reach out to you and we will answer any retirement questions you have, any Medicare questions that you have, and we'll go over the specific plans in your area and how they'll cover your medications, your doctors, and your pharmacies. All of our services are 100% free of charge, and we can even help you enroll. So take advantage of the links down below there in the comment section. And don't forget to like, comment, and subscribe. And if you liked this video, you're gonna love this one right here where we go over the best Medicare supplements to go with in 2025. So go check that one out and I'll see you over there.